Okay, hello everyone. Been a while, obviously, since I've posted a video, so I'm gonna try to do something here tonight. There's obviously been a lot of action, market been heating up in some names, and there's quite a bit of back and forth on X on gap ups and stocks extended and little flags breaking out and on and on and on. And it's kind of hard to stay in your lane if you're looking at all that stuff. So I'm gonna try to attempt to make a little clip here on staying on your lane and give some recent trade examples. Staying in your lane means doing what you know how to do. Doesn't mean other trades that people are putting on is wrong and not right. But you gotta pick your battles, you gotta pick your fights, you gotta pick what is your trading style. That's what I mean by your lane. And you really gotta stick to it. Otherwise, you're all over the board, all over the map, and you'll struggle. And I'm speaking out of experience when I say that. So, it's easier said than done, but, maybe if I do show some examples of recent trades, and even recently I posted on X about how, I think that was like a couple weeks ago, how I don't care, if people are, making money hand over fist in this environment, buying gap ups and buying small mini pauses in extended stocks. And I think I said like I'm 50% invested and I don't care. Right now I'm on margin in one account and 80% on another account. So that was 2 weeks ago. So my investments fluctuates. So I kind of want to elaborate on that, but you can search my X and see that piece. But I think you guys will like this. It's going to be educational as always. The reason why I don't post frequently is because there's really not a lot to say day over day and week over week. But opportunities like this, I like to take them and try to educate people who are trying to do this and trying to figure it out. So we'll try to keep it short. But I have a few examples here from recent trades and recent stuff that I've been seeing, why I've taken some trades and not others, and things like that. So let's get started. Stay in your lane. And then before we jump in, disclaimer, this is for educational purposes only, not financial advice, not recommendation to buy any securities you see tonight. Please do your homework, your own due diligence before trading or investing, as it is extremely risky. All right, I am gonna kick this off with ALAB. Obviously, I posted about ALAB and where I bought it, and a lot of questions on X. This isn't extended, blah 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 blah. So, first and foremost, you need to understand what extended means. Extended means a stock is out of its base and it's X percentage away from its base. And there's multiple different bases, and you guys need to go and read how to make money in stocks to understand the different bases. There's bases from flat base to cup and handle to double bottom, and on and on. And then there are IPO bases and primary bases. I think primary base is something that Minervini referenced a lot in his book, and especially in his MBA program. I don't think Bill O'Neill referenced primary bases, but regardless, there's different kind of bases, and even high tide flag is a type of a base. High tide flag needs 3 weeks to be valid from consolidation. Flat base 5 weeks. Cup and handle 7 weeks minimum. So on and on. You gotta understand that stuff, because when you're saying extended, you gotta look at, okay, where's the price currently from the most recent base. Let's take a look at ALAB, and I'm going to give examples why I bought ALAB, not, for example, Bros or Reddit, right? Because they simply had the same gap up on earnings and they were extended. So why I decided, and I was watching Bros, I was watching Reddit, but I wasn't going to buy them. A lot of people were, but I'm not going to, and I'll explain to why, and hopefully you'll see that. So first and foremost is obviously ALAB is a new base. and primary IPO base. And it is also high that flag. What's high that flag? Stock going over 100% in 4 to 8 weeks, and pulling back only less than 20 to 25%. So this only pulled back 14%. I bought ALAB right here making the turn. So here's the gap up on earning. This color here, the brown, means highest volume ever on the stock. It's even higher than the first day of IPO, which is just crazy. So that's obviously a lot of demand here, and there's a lot of people buying gap ups, buying it as it opens. There's a lot of people in IBD were buying this Friday close here because it looks really strong, and then they got stuck out on this bar here, which was down 9%, and I posted on that on X, down 9% on a stock that was extended this much. It's not doing anything wrong. Know what you're buying. This short term extended, but it's really not extended from the base per se. If you start putting some lines here and then try to figure out what is going on, right? It's not that extended, okay? But I'm not buying gap ups. I don't know how to buy gap ups. Not my style. It's never been in me. Bill O'Neill made tons of money buying massive gap ups on massive earnings. You more than welcome to do that if you figure out how to trade it and if that fits your style. It's just simply not my style. I cannot do it. I cannot press that buy button and buy gap ups on earnings. No matter how good the earnings are, no matter how amazing the report was or the price action, I just cannot do it, which means I am going to miss it. If this doesn't pull back, it keeps going up, I am going to miss it, and I am okay with that. So you gotta decide what your style is, what your DNA is. Buying, earning gap ups is not my DNA. So I made peace with that, and I don't care what the stock does when it gaps up. I wanted to see it consolidate. So even I'm not looking for the stock to, like, I bought it back higher than what it opened, right? So here's the open if you're buying gap ups. Here's the open. I bought it back over this high. So let's mark that. I bought it right here, okay? So I bought it higher than the open, but I don't care. This is how I do things, and this is what I am comfortable with, okay? So that's my purchase right here. Why? Well, again, this is high tide flag, primary base, pulled back only 14%, and then volume is drying, and then it is making the turn. Where is it making the turn? On the support, right? So what's my risk? Well, my risk is if it takes back this low, then I am out, which is a little bit over 5%. Now, that's how I like to trade them. I have a defined plan. I know why I bought it, and I know when I'm gonna sell it. If you bought it on the gap up here, where are you selling? Random 5%, random 6%, random 8%. They're all valid, but I don't do just random stops. I am buying it for a reason. It's turning back up. I want to put my stop back below the danger point, right? I made a whole video about danger point. This is already 8 minutes into this, so it's gonna probably be long. So anyway, I bought it here, and it's not extended, and it's a high tide flag. Pulling back, and consolidating, you can start to pull back from here. 1, 2, 3, 4, 5, 6, 7. Early, very early. 7-day in a high tide flag, extremely short. I heard me say at the very beginning, 3 weeks consolidation. This is not even a week and a half. This is an IPO, so they move faster, they move quicker. I'm okay going down to 9, 8 days, 10 days versus 15. So yes, this is extremely short from a high tide flag consolidation setup perspective, but this is the best, probably the best stock right now on the market. Like, I mean, look at this. Look at these numbers. So this is a primary base, high demand, blow up earnings, blow up sales, just buy-in since the bottom here, 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 here. So it has everything that I'm looking for. So and it's an IPO. I'm willing to bend the rules a little bit. Bending, stretching the rules, not throwing them away. Okay. In very rare situations, this fits the bill. Now, why didn't I buy Rose? Let's go back to the right list. Okay. Bros, same story. And I was looking at it right here. Right here. Same day. I think it was same day, Friday 15. And then ALAB was Friday 15. So it's the same setup. Come in Monday. Both were on my list. So here's Monday 18. Then let's go back to Rose. And here's Monday 18. So they were both on my primary list. But I was more interested in ALAB. Why? Because the setup is better. Now let's start just put in some drawing here. Here's kind of your top of that base. Okay. And then you see the difference? Okay. How does this look? This is still a little bit extended from that base. Valid buy. You can buy it. But I had to make a decision between Bros and ALAB, between coffee shop and AI theme. So and a better primary, better IPO base. A little bit. This is also still IPO, but again, this is how this looked, and this is how ALAB looked. Okay, so that's why I went with ALAB. Now, Reddit was another one. Gapped up, pulled back 1, 2, 3. Now this only pulled back for 3 days, right? But if we start growing here, this is again also IPO base. So if we, how far extended from the base? Pretty extended. I'm not gonna buy that. This needs to put a new base for me to be interested. I'm only buying in the base or outside the or right on top of the base. And if not, if it's outside the base and already broke out and I'm not in it, I'm just not gonna chase it. I need to get better at getting in a stock before it breaks out. Before it breaks out. So if it breaks out without me, I am going to look at that stock and figure out why did I miss it. If it's a leader, if it's something that has earning, that has sales, that have the arrests, and I missed it, I need to figure out why I missed it. I'm not going to chase it. So Reddit, for example, it was on my list, and I was looking at it. Let me just do this. I was looking at it right over here, and I didn't buy it. Right here, pullback buy. Let me do this quick. If you guys watched all of my pullback buys, beautiful pullback buy. Why didn't I buy it? I don't. I'm not a user of Reddit, and I don't understand it. I understand the strength in this stock. I understand ALAB and the strength in ALAB, AI theme. I'm in IT. I don't understand what Reddit do except that they're just community forums. Again, they might be doing more. I didn't do the research. I'm not saying they're not doing anything, but right, I wasn't just too interested in it. But this was a beautiful pullback buy, and I did not buy it. So now I missed the trade, and I'm not gonna chase it, right? So that's why I bought ALAB, and I didn't buy Bros, and I didn't buy Reddit. Hopefully that makes sense. Now, talking about, I want to be in it before it breaks out. And if I'm not in it, I want to study why. Okay, so this is one example, Reddit. Let's take a look at example of Shop. One that I'm still in, that gapped up on earning, and I'm in. This is exactly what I want to do. I got into Shop. There's obviously a large base, right? So where did I get in Shop? I posted about Shop tons of times in my on my feed, on my X. So go and look where I posted about it. Where did I buy it? I bought it right here. So let's go back and do that here quick. Okay. So that's how it was look when I bought it. Let's draw a line here. It's actually a beautiful setup. So here's the line. Okay. So you got a trend line. Let's make that look a little more pretty. So here's the trend line. Here's your 1, 2, 3, and then it's trying to break that trend line. You guys know I don't trade trend line breakouts. However, when a trend line is trying to be broken, and then you have a horizontal pivot while it's breaking, I am extremely interested. And this is where I bought it. So if you fast forward one day, I got filled on this pullback here. So I had a stop limit above this high right here. And then on this pullback that day, I got filled. And then the next day, the next day, the next day, and I'm sitting with this going through earnings. I've risked. So I got full literally on the low of the day. I was risking 2.5%, and then I was already going into earning up 12%. That's asymmetric leverage, right? Or risk. That's what I want. I want to be in them before, and this is what happened on earning. And I sold 20% of my position somewhere over here at the high, and now I'm still sitting with it, still in it. Okay, that's how I want to be in them. And if I'm not in them, so if I wasn't in shop, am I buying shop? No. Again, away from the base, I'm not buying it. This is potentially a pullback buy, but I'm already in it. I have a good size position. I haven't bought it. Maybe if it does something here, maybe I'll be interested this way here, but we'll see what happens. This is really tight day here. I don't know. Maybe I'll add to it on Monday. I haven't really looked at it that closely, but I still have the position open. So hopefully that helps. That's how I want to be in them before. PLTR is another example, ran away, right? And obviously a leader in this cycle. I was buying PLTR in the base right here. I bought it right here. I bought PLTR right here. With what's the risk? Again, what drives my decisions is the risk. I bought it right here, below these 3% risk. And I can't remember. I think I sold it somewhere here. I don't exactly. I think this shooting star. I think I was out here somewhere. And then I think I attempted it right here. I got nipped at the high and then stopped out, and then that was it. I kind of couldn't catch any of this. And then here didn't really. I mean, it's still on top of the base, right? Not extended. Here's the base on top of the base, but it just never set up crisp for me to try it. And then once, let me draw this here. So let's just say this is still part of the base, okay? So it's on top of the base. And then once it's up here, it's done. I'm done, right? I'm not trading this stock anymore. Not because it's the wrong way to trade. It's because I have decided that is not where I want to play. This is not where I'm fishing. There's plenty other people are. I know a lot of people that bought Palantir right here. Let me go back here so that we can see it. Okay, so a lot of people bought Palantir right here, breaking this mini, and then I think I referenced mini flags or mini consolidations when I started, right? So I don't. Again, if I'm not in it, why did I miss it? Okay, well, I missed Palantir because I sold here, and then this gap down. I mean, I would have not been in it, right? And then there's just volatility, and then it pulled back. It didn't really set up the way. I mean, could I have bought it here? Yeah, yes, right here. This is actually a nice pullback buy, back to the top of the base. But I don't know why I didn't buy it. And honestly, if I did buy it, I don't know what happened this day. If it went, took out the high and then took out the low, that would have stopped me out anyway. So, it just, I just don't chase them. But it's not wrong, right? There's a lot of people that buy stocks back to their 21. This is the 21 EMA, well extended out of their base, in a leading, strong, relative strength stock. There's nothing wrong with that. I just simply don't do that. Okay, and I'm okay with that. It's just I want to be in them before, and if I'm not, I will go back and study it and try to figure out, okay, how can I be in it? There was people buying it here Okay, good luck. I mean, can you hold through this going into earning? There's more people buying it here, breaking out here, just Friday. I can't. I mean, is this extended? Oh, hell yeah, it is, right? So just figure out what you want to be as a trader, and just stick to that. I think that's really my advice. You want to buy extended stock pulling back to the 21 EMA, strong growth stocks, pulling back to the 21 EMA, then fine, do that all the time, okay? Because you gotta be consistent. The secret behind being successful at this is being consistent and doing the same thing over and over and over again. I know. It's not what you do in normal life, but that's what you need to do to be successful at trading. Consistency and doing the same thing over and over and over again. If you look at all my trades for the last few years, I've been trading since 2006, but I wasn't like that, right? It's just in the last few years that I really understood what it means to be a trader, is doing the same thing over and over and over again. Pick 1, 2, 3 setups and master them, and doing them over and over and over again. If you are trading 20, 30, or trading whatever, you're a random trader. You are a random trader. You don't not want to be a random trader. Okay. GEV, right? There were people buying GEV, breaking out here. Okay, breaking out here, breaking out here. Let's just draw this here quickly. Okay, so breaking out here, breaking out here. Okay, breaking out here. Okay, fine. If and then here's the base, right? So here's the base. Okay, this is fine. This is not that extended. It's just getting going in a strong market. You can do that. I do that. I'll actually show you Netflix that I just did just recently. It looks very similar to this. So I'll show you Netflix in a second. But people buying it here, buying here, buying here. Okay. I don't do that. Here's the base. Here's buy points. If I'm not in from here, I am not gonna chase it up here. I'm not gonna chase it up here. I'm not gonna chase it up here. I'm just gonna go trade something else. Okay. And the market is not GEV only. You can sit and envy GEV going up, up, up every day and being a leader, and you're not in it and you're trying to force yourself into it. Or you can go find other stocks that will give you the same return. And trust me, yes, they exist. I have been trading them. Okay. NFLX, Netflix. Okay. And obviously I sold it. I could have made more, but look at Netflix. It looks very similar to who? To GEV, right? So it sets up this little shelf right above the base, very close to the base, right? So I bought GEV coming out right over here. Let's put that tick. And this is not scripted, so hopefully I'm not going on and on here. But I bought it here, okay? And I sold it here, almost the high of the day. I felt like I know what I'm doing here when to start pulling back, and now boom, right? But it doesn't matter. What did I just say a few minutes ago? Trading is about doing the same thing over and over and over again. I want to buy them tight. I want to sell them when they extend. I want to buy them tight. I want to sell them when they extend. And I want to do that over and over and over and over again. That's how my equity curve is making new highs month after month and year after year. So I've decided what I want to do. You need to decide what you want to do. This is not the only way. I promise you, this is not the only way. I just know how to do it my way. Okay. I won't buy it here. This is not a breakout. Some people buying it there, fine. Good for them. If they know how to do that, good for them. Not a lot of people know how to do what I'm doing. I'm cool with that. I'm good with that, right? New high before price. If you have my unbalanced volume, new high before price, before the breakout, right? Volume precedes price. Okay. So that's Netflix. What else? App. Okay. App. Oh my God. Okay. I bought app. We'll get to that here in a second. But there are some people, right, buying app, breaking out, some traders breaking out here, breaking out here, right? Breaking out here, okay? And they made crap load of money, right? There's some people that I even know buying ALAB, breaking out here, okay? Here's where the base. Here's the top of the base, okay? Like I can't, okay? I can't. Like you can't. You force me. I can't do that, right? It's just not me. I won't. If I'm not in it, I won't buy it. But I was in it, right? So this is exactly the point I'm trying to make. I didn't need to force myself in here and here. Well, actually, yes, because I sold it here, I think, or here, somewhere here. So I sold it way early. But what did I say? I don't care, because I want to do the same thing over and over and over again, and I want to do it as much as I can, right? I bought Netflix here, and I sold it up, right? So it's not like I'm just buying Up11, whatever that name is. But I bought it here. Okay, I bought it here. And I think I posted about it on X. I bought it right here in the base. So that's what I want to do. I want to buy them before they move and before everybody starts rolling about them. Okay, that is what I want to do. So I think we covered all of that: Shop, App, ALAB, Bros, Reddit, Palantir, GEV, Netflix. Okay, good. Some of recent ones that I made: AMSC. A lot of people asking, hey, I mean, this is AMSC. I have a lot of model charts on this stock back in, I think one of them is in 2017 or something like that. But this stock moves, obviously, right? I mean, when it moves, it moves. I wanted to buy it here. I couldn't. This a little bit deeper pullback here that broke support, so it was hard to kind of justify buying it here. And then it kind of on earning was up tremendously. So this is pulling back to this, like, it's kind of cup and high handle, right? So cup and high handle, okay, a little bit higher handle. So we have stocks that are really extended, and we have stocks that are not extended, like AMSC. Well, some folks will say, well, is it a laggard, right? Fine, I'll buy the laggard in a growth stock versus an extended stock, because I want to buy it in the base or on top of its base, because I know my risk. I know how to trade these setups. I don't know how to trade extended stocks. Okay, so I bought it coming out here, and I still have it. Now, I went, I think, 4% position on this one, so it wasn't that big. Why? Because of this. And there's some people asking me about that. Is this too early to buy it? That high range bar and high volume, you need to give it a little bit more time. But things been working. You want to be a little bit more aggressive, but still in your style, aggressive in your own style, not buying extended, right? If your style is not buying extended. So I bought that, and I kind of scaled back on the size. And this is what kind of gave me a little hope here. Here's the volume dry up. So you got a high volume back, but then it seems like selling has stopped, and that was really here on this small bar, and then coming out. So it's a defined trade, like always, right? Always defined trade. So buy it and then stop 6%, because this is a high ADR stock, and then it was up like 8%, and volatile pullback back to the pivot, bounced into the close in a doji, so still constructive. High before price on the OBV, so volume is still leading price. So hopefully this kind of blast out and maybe gives you an add-on or something like that. This is AMSC, CCJ. Oof, I'm pretty loaded on this one. I bought CCJ, so I'll kind of walk you through what I did here on CCJ. Obviously, Uranium, power and AI going forward.
or at least a lot of hope that it will power AI going forward. Look at this volume pattern, right? So look at the selling, 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 and then now accumulation, accumulation, unbalanced volume, telling you the accumulation, uptime volume, all that stuff, right? So looks good. Big base. Try to broke out here, and I'll show you how I sell. And a lot of people tell me, how do you know how to sell or whatever? I mean, selling is hard. It's a lot harder than buying. But I'll just walk you what I did with CCG. So I bought CCG here, right over here. Okay. So this is creative pullback buy inside that base. So really strong, lots of buying. And then look at the pullback here. Volume drying up. You see these dots? Volume drying out. Guys, all the indicators on my chart are there for a reason. Okay. There's no triggers. There is no buy sell signals. This is all things that help me see accumulation, calmness, supply stock come into market. See all that stuff very fast, very easily. That's the driver behind the colors and the indicators on my chart. As clean as I can, but I need them to help me see the accumulation, distribution, price action, volume action really quickly. Volume dry out on the pullback, and then you got this low risk entry. I mean, look at this. Look at this. 1.6%, 1.8%, 2.3% below that two-day low, 3-day low. And then when I get a move like this into new highs, I sell into that. It's not a healthy action. So I literally sold, I think, this day, even before this day. Just quick shakeout, 2, 3, 4, and then into new high ground from down here. That's a big move. Does that mean if the stock just does this, I'm gonna miss it? Yes, it does, and I'm okay with that. Okay, so you can't do both. You gotta make decisions. You can't take short-term profits and also be there for the long run. You gotta make decisions. So when this pulled back, I'm obviously still watching it because that's why I sold, because I thought it's gonna pull back. Okay, that's exactly what I wanted to see. Pulling back here, I didn't like the volume on the pullback here, so I kind of waited a little bit. I don't know what else was going on. I think maybe other stock was setting up better or something. Attempt just broke back down, start looking a little bit funky here, breaking the 21 EMA, but then earnings right here, right? Good reaction, and then you start having volume dry out, and then this bar right here is what got me back in. Okay, so I got back in above the high, and then I'm still in it. Okay, so I haven't sold any because what I am hoping to see, there's a reason why I sell, there's a reason why I don't. Okay, so I have not sold any yet, and then what I would like to see, so this is now, I think this is all-time high ever. Yes, it is. You see that is breaking to all clear skies, all-time highs. Okay, this monthly chart. So what I would like to see is this kind of coming back down like this, and then rounding back up, and me even making this position even bigger. Okay, so that's why I didn't sell. This one is too steep from the bottom. This one is not too steep from the bottom because it is right close to the top of its base. This one is a massive run from the bottom, very prone to failure, and that's exactly what happened. So buy, sell, I'm back in, and I want to see that pullback. I want that pullback. I don't want the stock to do this because then it's gonna probably fail harder. Okay. I mentioned on UAC, I was buying that too. Same thing, uranium. I bought it right here, and then I did the same thing. I think I sold both of them on the same day, and I was back in here as well. It's really the same setup, but this is a lot more volatile. I actually sold I was pretty heavy here, and I sold half when it closed this way. So I sold half at the close, and then I kept half because I was kind of pretty heavy on uranium going into, this was Friday, going into the weekend. Kept all of CCG. CCG closed a little bit better, and again, it's the quality stock. And then I sold half of UEC to take some of that risk off the table, but thankfully it opened up. And then now it's really setting up really well. So we'll see what it does. What else? I think that's it. Upstart had it on my list too. Obviously, it's a little bit extended, not as much as the other ones because you've got the top of the list here, but this is also high debt flag, I believe. So if you measure from here to here, 168%, and then pulling back, let's see how much it pulled back. Oops. Pull back 22%, so at the higher range, 25%. Tightening up. I tried to get into it here somewhere. I wasn't successful. This is a good setup here, but it wasn't on my list for whatever reason. Pull back buy, drying out, really a lot of volume here. So I think that's it. It's been 36 minutes, coming up on 36 minutes. So I hope that helps. I'll get this posted here soon, but I covered tons. So hopefully it helps kind of walk you again through my process, refresher, how I think, how I do things, and my do's and my don'ts. Somebody posted about that. Also uranium, that it's setting up, and as soon as I open the chart, declining 200 is an immediate no. This won't even get on my scans. So that's a no. Not interested at all in this one. What else? EXP was a recent buy here that I did. So if you look at EXP, again, just I want to hammer this idea. Top of the base, here's your base. This looks like a good inverse head and shoulders, right? Breaking out the neckline, testing it once, testing it twice, earning. They bought the earning, bounced it back, and then right here is where I bought it. I sold it up here, and then I bought it back here on this pullback. So I am back in this guy right here, right? Again, nice pivot, pulling back, first pull back, a little bit above, but this is like the first test of the 50. I'm trying to get more examples on the first test of the 50 because when there is a nice base breakout, the first trip back to the 50 MA line is something I'm interested in. I'm trying to think of an example. I mean, this is one example. This pullback is not this is the 50 or the 50 or the 10-week MA. They're still in the base, the top of the base. I'm talking about the first pullback outside of the base, back to the 50. I'm interested in those, and I trade them quite often in really strong stocks. I can't remember one right now off the top of my head. So like GEV, when it pulls back to its 50 for the first time, I'll be interested because it's most likely will be like building a base, right? Normally when they're pulling back to their 50, they're building some type of a base. So that's why, and then they bounce off of that, right? By the time you go down to your 50 or 10, you got 1, 2, 3 weeks down, and then you're rounding back up, week or two. That's 5 weeks, right? So I'll be interested in those. I think I'm gonna leave it at that. It's 40 minutes. It's way too long. So hopefully that helped, guys. Just share these videos. Trying to get more people to listen to those on YouTube. Not a lot of traffic like X, but spread the word if you can. Yeah, if there's anything else you guys want to see, let me know. I will do the giveaway tomorrow. Sorry, I've been busy today. But I'll do the giveaway for the 100 rate in stocks for Bill O'Neill. I'll post the name of the winners tomorrow. So hopefully you get one. It's a really good book. Anyway, have a good night. I'll talk to you later. Bye.